Hey everybody, I'm going to try to keep this at 10 minutes. I'm just going to go through my ETFs because, I mean, goodness knows there's no individual ideas needed after the 90 that I shared over the weekend. As you well know, basically some form of war has broken out and the stock market fell all of about 0.5 percentage point. And as I've been indicating, that's fine by me because I really like things slower. So this works out. I wanted to buzz through my ETF watch list. Some items I'll just skip right past with a moment or two. Others I'll spend a little time on. But you know, with 50 to do, I can't spend much time on any of them really. But I just want to do a survey. And these are in order, but alphabetical order, which is pretty meaningless. So here we go. Starting with Commodities Dbc, obviously doing well. Thanks largely to oil's continued ascent. I don't trade it. The diamonds, these of course have been getting pounded to some degree, and there is fairly important support coming up right about here, around about 331 or so, which if broken, and you know what, let's be a little more conservative. Let's drag this down to the actual price gap, way down there. Because not only do I like gaps, but also failing this line would also do a very neat job, depending on the time, of breaking this biggest of the big trend lines, going all the way back to March 6, 2009, the very nadir of the financial crisis. So that's worth watching. Emerging markets, ain't got nothing to say. EFA, you know my fondness of this. We had a dedicated post about EFA today, as well as IEFA. These continue to do nicely. I think there's a slightly important price gap we've hammered out today because of the drop at 75.08. So it'd be kind of nice, please, if it stayed below that level. EMB, the emerging markets bonds, continues to tumble. These were down 1 1/3%, which is terrific. I mean, you've seen this pattern many times, and I suspect in the months ahead it will just continue to lose value. Japan, EWJ, lost about 0.8%. Kind of an ugly pattern because it's so gappy. EU, the Mexico, boring. EWZ, Brazil, also pretty boring. EZU, the Eurozone, this fell hard, 2.37%, and it tagged its long-term trend line right there. I'm cheating a little because this is anchored to here and here, and it was violated rather grotesquely by the COVID crash, but I still think it has some value, so I've left it in place. And so we tagged that today. Not in this position anymore. It got out last week. This one's kind of comic. This, of course, is the triple leverage bullish on the FANG stocks, FNGU, and it's lost about 2/3 of its value in a pretty short amount of time. It peaked, the tippity top on this, which was sort of, that was November 4. That was probably the absolute apex of Cathie Wood's wonderfulness, and so things have been crumbling ever since. Miners, GDX. I actually bought puts on these today, even though I love gold. I did buy puts on this because of this trend line. I just think we're at an area where it would make a certain amount of sense to be repelled some from that. Nothing, it's not a great pattern, but I just thought it was kind of, you know, ready for a little drop. Juniors, kind of the same logic. I don't have anything in this, but it's just getting near its descending trend line there. Gold was up a little. Not quite 1/4 point, but I just like how this is looking ever since this breakout. And I've anchored this to the price gap. As long as we stay at or above 174.86, I think this is heralding a new bull market in gold. HYG, same old, you know, these yield things getting just dropping. IEFA, obviously very similar to EFA, but I happen to like this chart better. It's just, even though it's almost a pixel for pixel identical between the two of them, I just like this chart better, and it's a much cleaner topping pattern, I think. And notice we are finding some support at this Fibonacci. Should we get rocking and rolling in Europe, clearly the next target will be way down here, which is a good $6 approximately beneath present price levels. ITB, Look at that, interesting. We breached that one. Is this real estate? I think I've lost track. It doesn't say. I think this is. I think that's real estate related. IWM, the small caps, down almost a full percentage point. This line here did an amazing job. You remember this line? I've talked about it a lot. We got so close to it on the 10th of February. Just beautiful. It's expression. In fact, just as an experiment, I want to see something. You know what? I'll put it there because that's closer still. So we'll tighten things up a little bit. So the range and then the failure and then the retrace looks really clean. And so obviously if we ever break this level, then it's kind of end of the world time. IYR, our ancient analog here, continues to do very nicely. And we tagged this very, very flimsy support level today. IWT transports, boring junk, same old as all the others. KBE, boring liquid, same old. MDY, virtually identical to the small caps. MUB, this is another same old, although it got a little bit of strength today, but this is just a fantastic long-term bearish pattern. S&P 100, take note of this trend line here, the red one. If we zoom in, it just about tagged it today. So again, there could well be an argument to be made to get some kind of rally at this point. I hope not. This is too fun. I'm enjoying this, but we are rather close to major support lines there. But it's a two-sided coin. Should that support be breached, then it makes it that much easier for a hard fall to take place. Here's the cubes. Kind of the same logic. We're getting close to a decade-big trend line, and we actually matched the low from back on the 24th. Same old, SJNK. Silver, a little bit of a rally today, thanks to gold. Semiconductors, SMH, we zoom in here, and they're below their midline. I've still got some puts on this. I've got a AMD, NVDA, and TXN. I'm short those three. Spiders, clearly, and I did a premium post about the Fibonacci's, but crazy important support right there. TBT, barely changed. TLT, up a little bit, boring. TNA, the small caps continuing to tumble away from their own kind of warped version of the IWM here. This is the TWM, which is the ultra short on the Russell, up about 3% today. Natural gas, what a mess, huh? Oil we saw earlier. I think we actually no. Geez, I'm conflating my show with this. We didn't see it earlier. I didn't talk about it. But here's USO. We're getting closer and closer to this price gap here, 68.80, which may or may not may never be filled. Biotech's down again. Home builders fell hard. I'm not sure why, but they have broken support here, and they fell 3.22%. So nasty stuff there, like so. XLB, which is materials, down 0.83%. Communication continuing to be dragged down. This has been falling pretty consistently since September, for Pete's sake. So we're about half a year almost of falling on this, gone from 86 down to 66, or approximately. XLE, a nice drop today, huge bearish engulfing pattern on the candlestick. Financials, boring. Well, they're not totally boring. Let's just take a peek. Yeah, they're boring. XLI, the industrials, this one sneaking below support line here. And I'm sweating the 10-minute mark, so I'm really sailing at this point. We're on all four cylinders now. XLY, XME, nothing to say. XOP, did a special post on this, but I like this one on the short side too. And XRT, getting hit pretty hard, down almost 4%, and breaching this support thanks to Home Depot, I assume. All right, that's it. See you tomorrow.